Today I will be showing you this amazing strategy that gives a lot of winning signals. This strategy made 83% win rate within a short period of time, and this strategy was tested on the 1-minute time frame. I recently discovered the strategy as it uses just 3 indicators, which makes it very easy and user-friendly for beginners. I will backtest it 200 times with an initial account size of $1,000, so watch till the end because in 1 month, you could double or triple your account size with this strategy. Without further ado, let's jump into it. This is the Euro-United States dollar pair, and we are currently on the 1-minute time frame, as this strategy works best on this time frame. So let us quickly go over the strategies, but first, let me introduce the indicators we will be using for this strategy, as it is what's going to determine our strategy, and later in the video, I will be revealing the best settings used for this strategy. Okay, now, for the first indicator, we have the moving average. This one right here is there are different type of moving average. So we have just this simple moving average and we added 2 of this to our chart. And here are the indicators on the chart as they are colored in blue and yellow. For the third indicator that changes color, we have the chrismoody ultimate moving average. Now let me show you the one it actually is, because there are 2 of them. And please watch this video till the end because there are a lot of errors you need to avoid if you really want to get a high win rate in your account. Go ahead and bring up your indicator panel, go over to community script, and that is this button right here. Now on this 3 headings above, move over to top. When you are on this page, scroll down a little till you locate this 2 ultimate moving average by chrismoody. For this strategy, this is the one we are using, the ultimate moving average multi-time frame. Okay, now that you know the indicators we are using, let us go over on how to use them. Now for a sell signal to be valid, we want to see the yellow moving average above the blue moving average, and the ultimate moving average has to close below the 2 moving average. Then we would wait to see the ultimate moving average change to green, then enter trade on the next available red signal from the ultimate moving average, as our stop loss will be at the recent swing high, and our take profit level at 1.8 times the risk. We see we met our condition here, as the ultimate moving average is below the 2 moving average, and the yellow moving average is above the blue moving average. Our ultimate MA changed to green at this point. Before we got our trigger candlestick here where the ultimate moving average changed to red, we would go ahead and place a sell order at the bottom of the trigger candlestick, and our stop loss will be the recent swing high, as take profit levels is 1.8 times the risk, and we see that the trade was a success. We also got an entry signal for a sell trade here. As you can see, our conditions were also met at this point, and the trade also turned out to be great. There are a lot of winning signals if you use this strategy right. Okay traders, now the major error you should avoid is this: when the price closes above the blue moving average and there is no wick touching the blue moving average, we will not take the next available red signal from the ultimate moving average, just as we have seen here, even though the trade was a success. Here is another example where we see the price close above the blue moving average, and no part of this candlestick touched the blue moving average, so this next red signal from ultimate moving average is not valid. And the reason why we avoid this is because it is proof that buyers are entering the market in a bearish trend and pushing the price above the moving average, as we wouldn't want this. We want more of the sellers in the market than buyers when we are in a downtrend. Now let me show you the settings we are using for this strategy, before we go on to how we take a valid entry long position, and also, more errors you should avoid when using this strategy. Now for the blue moving average, these are the settings. And for the yellow moving average, these are the settings. And the last indicator on the strategy, these are the settings. Okay. Now you have the settings, let's go over to the rules for a long trade. For a long trade to be valid, we need to have the yellow moving average below the blue moving average, as this shows that we are in a bullish trend. Now we enter trades when we see that the ultimate moving average changed to red, and our entry signal is valid when we have our next green moving average, just as we see here. Now we will be placing a buy entry at this point. Our stop loss will be at the recent swing low of the price, as our take profit is 1.8 times the risk. As we can see that this was a success, and a little bit further, we got another buy entry signal right here, which we would take and made another profit. We see another signal to enter trade at this point, which we would also take. Before the price retraced back below the blue moving average, as you can see here. So within a space of 2 hours we made 3 amazing profits. Please note that when the price is in between the yellow and blue moving average, we do not take trades as the price is yet to determine its trend. Now let's quickly go over some few examples to make you better understand this strategy. So here is a sell trade that we would have taken, as we see that the yellow moving average is above the blue moving average, and price action is below both moving average. We would therefore wait for our trade entries as we got at this candlestick. We would be placing a sell trade at the lows of this candlestick, and our take profit and stop loss remains the same. We see that we were successful with the trade. So here is a buy trade we would have taken. So here we see that the blue moving average is above the yellow moving average, and we see that even though price traded below the blue moving average, all the candlestick that traded below had its wick touching the blue moving average. So this signal here was our entry point as we enter trade at the peak of this candlestick, and as you can see, the trade was not open as price retraced, and our trade opened at this candlestick. As the bullish trend continued, note that this next signal was not valid, as when price closed below the blue moving average, this candlestick traded below the moving average as there is no wick on the blue moving average. Therefore we would not take a long position at this entry signal. Okay traders, and that's it. Let's quickly go ahead and backtest our strategy with an account size of $1,000, and we would be covering 200 trade during the backtesting. Let's dive into it. So we just finished the backtesting for this strategy, and we can see that the results are amazing. We had a win rate of 83% in 200 backtested trades, having won 166 trades and lost 34, which made us 264% return on investment. And I found those wonderful trade setups within 6 weeks, although commissions and spread fees would eat up some of the profit in real trading, because it was not included in the backtest. So you definitely want to expect that number to be lower when trading live. The profit factor for this strategy is looking good, I guess, and we had 7 wins in a row against 3 losses in a row. So yeah, I'm definitely happy with these results. Okay traders, that's it for today. Thanks for watching, and see you in the next one.